Why market forecasts fail and what actually matters. Hello, this is Jacob Milliken with 9M Investments. And today we're talking about our latest blog post, Why Market Forecasts Fail. And what I mean by that is why do they fail everyday investors? All the big investment houses at this point have done their 2025 recaps, and whether they were right or wrong on their forecast at that point doesn't really matter anymore. And so rolling into January in 2026, all the big investment houses are outlaying their thought processes and all their numbers of, what it does going to look like in December of 2026. And it's not that they don't put time and effort. There's hundreds, even maybe even thousands of man hours that go into putting these forecasts together. But the really important thing when you think of what is actually important to investors is what do these forecasts have to do with my actual plan? So one of the reasons that forecasts fail investors is once things happen, one of the things that all these man hours really can't do is forecast what are investors going to do? How are they going to react to the changing conditions, the things that pop up that we weren't ready for? And so when you think about forecast, a lot of times what that does to everyday investors is you end up chasing performance. You make changes based on headlines instead of your objectives. You abandon well-constructed plans way too early. Again, always kind of chasing the next thing. And it's easy to do. Even I've seen in my career advisors kind of fall prey to the same type of things. But really, what's important is instead of focusing on market forecast of what I think the market will do this year, which is almost always the number one question I get from prospects, is what needs to be true for my plan to work? And that's where it really digs into what is your situation? What do I need my portfolio to do for me, whether that is growth focused, income focused, or somewhere in between, and build a plan around your objectives, not of what we think the markets are going to do. And so, when you start planning first and then let the portfolio follow that, it really shifts the emphasis toward reliable sources of income, liquidity, diversification of return across multiple return drivers, flexibility, because always, the markets may not cooperate the way you want, your life may not cooperate the way you want. So these are all things that we think about when we're building portfolios is really focus on the planning piece of it. What are your objectives? What do you need your portfolio to do for you at this point? So again, it really keeps you from doing the chasing, always looking up to, what is the next thing? What are the headlines saying? What do I need to be doing different? It really keeps the focus on what's the most important. What do I need my portfolio to do for me? Again, is that income? Is that growth? Or is it somewhere in between? And having benchmarks to measure that. Am I keeping up? Am I doing the right thing? So again, always trying to keep it simple, keeping away from chasing headlines and doing what's best for you is not only necessarily, what the forecast says or what somebody else says for that matter. So anyway, questions about this, always feel free to reach out. I hope you have a great day.